Welcome back to our channel. Today, we're diving into a critical topic that is shaping the global economy, how the ongoing conflict in the Middle East between Israel, Gaza, and Lebanon is affecting commodity trading, especially oil, and what this could mean for you at the gas pump. Overview of the conflict, its global impact. The situation between Israel, Gaza, and Lebanon has not only drawn widespread attention for its devastating human toll, but also because of the significant ripple effects it is sending through global markets. One of the key concerns is how this conflict might disrupt critical trade routes and commodities that are vital to the world economy. In today's interconnected world, conflicts in one region can have far-reaching consequences. This particular conflict could impact a wide range of commodities, from oil to agricultural products, and cause significant disruption in trade between the Middle East, Europe, the US, China, and beyond. Impact on global commodity trading. And when it comes to commodity trading, stability is key. Wars and conflicts often create uncertainty, leading to price volatility. Traders in commodities like oil, gas, metals, and even agricultural products such as cashews are all on edge, waiting to see how the situation will unfold. The Middle East is home to several key commodities. Oil is the most obvious, but it's also a crucial hub for agricultural products, including cashew nuts, with the Gulf states serving as significant markets for this and other goods. If this conflict escalates further or draws in more countries, we could see significant delays, higher shipping costs, and severe disruptions to the flow of these goods. The oil trade and the Strait of Hormuz. Now let's talk about oil, perhaps the most critical commodity in this discussion. The Strait of Hormuz, located near the conflict zone, is one of the most strategic choke points in the world. This narrow passage connects the Persian Gulf with the Arabian Sea and is responsible for the transit of nearly 20% of global oil supply. If tensions in the region were to escalate and the Strait of Hormuz were to close, or even face a partial blockade, the impact on global oil supplies would be immediate and severe. This would not only lead to price spikes in crude oil, but could also cause disruptions in supply chains, leading to shortages. Impact on gas prices for drivers. What does this mean for you, the everyday consumer? It means higher gas prices, much higher. We're already seeing gas prices rise due to supply fears. In some scenarios, the price per gallon could surge dramatically, with prices potentially spiking over $5 or even $6 per gallon in certain areas. The last time we saw major geopolitical tensions in the region, gas prices shot up, but this time it could be worse. With global demand for oil still high and supply tight, even a small disruption could send shockwaves through the market. If the Strait of Hormuz closes, we're looking at a worst-case scenario where fuel prices could double or even triple. To the ripple effect on other commodities, cashew trade highlight. While oil is the big story, we can't forget about other important commodities. One surprising area that could be of course is the trade of cashews. The Gulf states are a key market for cashews, and disruptions in this region could make it difficult to get products like cashews to market. Given that the US, China, and the EU are also major buyers, any interruption in the supply chain could raise prices globally, affecting everything from the cost of snacks to luxury goods that rely on nuts in their production. This could put a squeeze on farmers and traders, particularly those in Africa and Southeast Asia, who depend on stable markets to sell their produce. The ripple effect could be felt across the globe in surprising ways. The potential long-term impact on the global economy. In the long term, this conflict could cause damage to the global economy that might take years to repair. Higher oil prices mean higher transportation and manufacturing costs, which could lead to inflationary pressures worldwide. Central banks already struggling with post-pandemic inflation might have to raise interest rates even higher to combat rising costs, putting further strain on consumers and businesses alike. And it's not just oil and gas. The instability in commodity markets could affect everything from agriculture to technology, creating a ripple effect across multiple sectors. A call for peace and stability. Despite the grim outlook, there is always hope. As global citizens, we can only hope for a peaceful resolution to this conflict. The people of the Middle East, like people everywhere, deserve a future of peace and prosperity, free from the shadow of war. Not only would peace bring stability to the region, but it would also help restore confidence in global markets, lower commodity prices, and alleviate the economic burdens that come with conflict. A peaceful resolution would allow nations to rebuild and refocus on growth, benefiting both the local populations and the global economy. So as we conclude, let's keep in mind the importance of peace not just for the sake of market stability, but for the millions of lives affected by this conflict. So we wish all parties involved the strength to seek resolution, and we sincerely hope for an end to the violence and the return of peace to the region. Thank you for watching, and please don't forget to like, subscribe, and comment below with your thoughts on how this conflict might affect global markets. We'll see you in the next video, hopefully under brighter circumstances.